for giving me this opportunity. So this is my first topic, AI tools for automatic financial entry and cleaning. So first of all, I will give the instruction. Uh, in today's fast-paced financial world, precision and expenditure are essential when managing enormous sums of figure. So artificial intelligence has significantly reshaped the landscape of financial data entry and cleaning by automating labor-intensive error-prone Projects like optical character recognition (OCR), AI tools can extract data from documents such as invoice, receipts, and PDFs, while natural language processing (NLP) enables them to understanding, categorize, and standardize this data intelligently. Machine learning algorithms further enhance accuracy by identifying patterns, flagging anomalies, and learning from corrections over time, making the system smarter with every book and Never learning models for high accuracy extraction, book streamline keeping by automating and reconciliations and stamply optimizes invoice processing with AI-driven workflows. These tools not only scale with growing data volumes but also integrate seamlessly into existing enterprise systems like QuickBooks, SAP, and financial workflow efficiency. Moreover, compliances and data protection are Yes. Moreover, compliance and data protections are central features with most solutions offering end-to-end encryption and meeting standards like GDP and SOX. For managing enterprises accountants, AI-driven automation minimizes time spent on data hygiene and entry, freeing them to focus on analytics, forecasting, and strategic decision-making. The shift from manual to intelligent automation marks a pivotal step toward more resilient, agile, and insight-driven financial operations. Yes. The integration of artificial intelligence into financial data entry and cleanizing how organizations manage their traditionally data entry involved manual input of large volumes of information from invoices, receipts, and bank statements, an error-prone and time-consuming process. AI dramatically streamlines this is by employing optical character recognition to digitize printed on handwriting documents, enabling instant extraction of key financial data like amounts, dates, vendors' names, and tax information. So we will proceed to the second slide. Now I understand that what is financial data entry and cleaning? So financial data entry and cleaning is the process of capturing, organizing, and refining financial automation to ensure it's accurate, complete, and ready for analysis or reporting. It starts with entering raw financial data like invoices, receipts, transaction records, or payroll files into a digital system, often resourced from paper documents, emails, or spreadsheets. This data can come from various departments and sources, and it is typically inconsistent or incomplete, especially in high volume organizations. Once entered, the data cleaning phases kicks in that involves correcting errors such as duplicate entries, missing fields, formatting inconsistencies, or mismatched records. It also includes categorized data accurately, example, tagging expenses correctly, or linking payments to corresponding invoices. Cleaning data is essential because even small errors can throw off financial reports, cash flow, projections, or compliance audits. When automated with AI tools, this whole process becomes faster and more of finance teams spending hours entering line items and chasing down discrepancies. Machine learning and OCR, machine, sorry, when automated with AI tools, this whole process becomes faster and more of finance teams spending hours entering the line items and chasing down discrepancies. Machine learning and OCR power tools handled much of the heavy lifting, allowing humans to focus on high value work like analysis, forecasting, and decision making. Let's explore financial data and cleaning in greater depth, especially with our background in intelligent document processing and financial modeling. So financial data entry and cleaning is the foundational step in building trustworthy, high quality financial systems. It begins with sourcing raw multitude of inputs, scanned invoices, payment receipts, bank statements, ledger entries, procurement documents, payroll reports, and often semi-structured email attachment. This data rarely comes in a ready-to-use form. It may be handwritten, formatted inconsistently, contain duplicate transaction, or lack necessary categorization. The job of financial data entry is to digitize and organize these chaos. Traditionally, this meant manual transcription into Excel, ERP platforms like SAP or QuickBooks or accounting databases on approach prone to fatigue-related errors and time efficiencies. This is where data cleaning becomes critical. Cleaning involves validating entries, example, ensuring that debit and credit balances, standardizing formats like converting all data fields into a human structure, removing duplicates, correcting answers, misclassified expenses, and ensure complements of records. These processes are vital not just for compliance and auditing purposes, but also for analytical accuracy, since even minor consistencies can throw off budgeting models, working capital projections. Let's come to the third slide. Why data entry matters in finance: accuracy and reliability, regulatory finance. So I will expand it into 5 points. The first is accuracy and reliability. In accuracy and reliability, high quality financial decisions depend on clean, precise data. Accurate data ensures entry financial reports reflect reality, avoiding costly errors in budgeting, forecasting, or reconciliations. Precise data entry ensures financial records are correct and trustworthy, forming the basis for informed decision making and reliable reporting. And the second is regulatory compliance. Finance is a heavily regulated domain. Proper data entry ensures that all records are audit ready, supporting adherence to standards like SOX, GST, or IFRS, and helping companies avoid penalties or reputational damage. Clean, well documented data helps meet legal and tax related standards, making audits smoother and reducing the risk of finance or non compliance. And the third point is efficient financial management. Well maintained records streamline everything from accounts payable and receivable to payroll and budgeting. Clean data allows faster processing, automation of workflows, and real time visibility into financial health. Organized data speeds the process like budgeting, payroll, and invoicing, enabling timely insights and operational efficiency. And the fourth point is fraud prevention and risk management. Meticulous data entry helps flag irregularities early, like duplicate payments, unauthorized transactions, or missing vendor details, which is vital for detecting fraud and maintaining robust internal controls. Proper data entry helps identify suspicious patterns or errors early on, reducing the enhance of fraud and strengthening internal controls. And the fifth point is business growth and strategic planning. Reliable financial data forms the foundation for modeling growth strategies, exploring markets expansions, and securing investments. It empowers leadership to make confident data-backed decisions. Accurate financial data supports forecasting, performance analysis, and long-term strategy, make it easier to scale and compete. So we can pursue the so it is the so it is the common challenges in manual data handling. Human errors, typos, miscellaneous, and incorrect entries and can lead to discrepancies in financial records affecting decision making and compliance. Mistakes like typos or wrong entries can lead to inaccurate financial data, impacting decisions and compliance. The second point is time consuming inconsistencies. So, time consuming explaining is manually entering and cleaning large data sets takes significantly time, showing the operations and analysis. Manually processing large amounts of data takes a lot of time and slows down business operations. Can we proceed to the third point? That is inconsistencies. Different formats, missing values, and duplicate creates confusing and reduce data reliability. Variations in data formats and missing or duplicate entries reduce the overall accuracy and reliability of information. And the fourth is security risk. Handling financial data manually increases the chances of misplacing documents or unauthorized access. Paper-based or manually handled data is more vulnerable to loss, theft, or unauthorized access. Fifth is scalability issues. As business grew, manual process struggle to keep with the increasing volume of financial data. As data volume grows, manual systems become harder to manage, making it difficult to scalable effectively. As a business expands, so does its volume of data. Manual systems don't scale efficiently. More data requires more people, more time, and more resources. This makes it harder to adapt to growth, respond to market demands, or implement data-driven strategies in a timely and cost-effective way. So the next is role of AI in finance. So the role of AI finance, I will explain it. Automating data entry and processing AI powered tools streamline financial data entry, reducing human errors and saving time. So the first is automatic data entry and processing. AI identifies suspicious activities by analyzing patterns and detecting anomalies in transactions. AI tools handle repetitive data tasks faster and more accurately than humans, helping reduce errors and save time across financial operations. The second is fraud detection and security. By studying transactions patterns, AI can flag suspiciously activity in real time, strengthening security and helping prevent fraud. So the third is predictive analysis and risk management. Uh, Models forecast market trends, assess risks, and implement strategies. And AI models analyze past data to forecast future trends, identify risk, and support better financial decision making. The fourth point is customer service and chatbots. AI-driven virtual assistants provide real-time support for banking, investments, and financial inquiries. AI-powered assistant provide instant response to customer queries, improving service quality and freeing up human agents for complex issues. Next point is customer service and chatbots. AI-driven virtual assistants provide real-time support for banking, investments, and financial inquiries. For example, AI-powered assistant provide instant response to customer queries, improving service quality and freeing up human agents for complex issues. Next point is the algorithmic trading. AI optimizes trading strategies by analyzing market trends and executing trades at optimal times. And AI can process market data at lightning speed and make automatic trades the most favorable times, increasingly efficiency and profitability. The next is personalized financial planning. AI-powered platforms tailor investments and budgeting recommendations to individual financial goals. In brief, I can explain is that the by analyzing user data, AI tools offer tailored advice on saving, investing, and budgeting to help individuals meet their financial goals. On the next slide, we can go to is overview of AI technologies used. So let's about the first point, which is machine learning. Machine learning algorithms analyze historical financial data to make predictions about market trends, credit risk, and fraud detection. Supervised learning models classify and financial transactions, while unsupervised learning helps identify anomalies. Um, Unsupervised learning to detect unusual patterns or anomalies in large data sets. And the second point is natural language processing, which is NLP. NLP processes and understands financial documents, automating customer inquiries, compliance checks, and content analysis. Sentiment analysis helps gauge market reactions based on news and social media trends. As we know that it helps to understand and interpret human language in financial contexts and automatic customer service, compliance checks, and document analysis, performing sentiment analysis to help social media affect the market. Third point is blockchain AI integration. Combining blockchain's security with AI's intelligence boosts financial integrity. AI improves fraud detection within blockchain-based transactions. Smart contracts used AI to automatically execute and enforce financial agreements. Smart contracts powered by AI automate payments and enforce agreements. AI enhances blockchain security and fraud detection in financial transactions. And the fourth point is generative AI. AI-generated reports, summarizes, and personalized financial advice improve interactions, helps in creating automated financial insights, which is the technology creates content like financial reports or client communication, help generate summaries insights and recommendations tailored to users, enhance personalized financial planning by producing clear data-driven advice. So the next point is benef next slide is benefits of automation. So the will explaining is the first point is increased productivity. Increased productivity, automated systems can work continuously without breaks, leading to higher output in less time without fatigue or the need for the breaks. Automated systems can operate 24 by 7 without fatigue, allowing businesses to produce more output in less time. This continuous operation boosts efficiency, reduces delays, and helps meeting demanding timeliness, especially valuable in manufacturing, customer service, and data-heavy environments. The second point is cost efficiency. So the cost efficiency helps to reducing human labor for repetitive tasks and lower operational cost. By handling repetitive tasks automatically, business reduce labor cost and lower expenses associated with manual errors, to which it helps to rule-based task automation significantly cuts down on wages, training, and errors related cost over time. This leads to improved profits margins, especially within scaling operations. And the fourth- third point is improved accuracy. The improved accuracy helps to minimizing human errors, consistent and precise results, to which it helps to automate. Automation minimizes human mistakes, ensuring data and process consistency for more reliable results, in which machines follow defined rules and workflows with precision, reducing the likelihood of human error. This leads to higher quality outputs, whether it's entering data, generating reports, or assembling products, and supports compliance with regulatory standards. And the fourth point is the time saving. Time saving tasks that would take hours manually can be completed in minutes with the automation. Process that would take hours to complete manually, like data entry or report generation, can be done in the seconds. What might take hours or even days for a human to do can be completed in minutes with the automation. Whenever it's invoice processing, responding to customer queries, or analyzing large data sets, automation accelerates workflows and shortens turnaround times. The fifth point is enhanced safety. Enhanced safety. Automation reduce the risk of human exposure to dangerous environment. In environments like manufacturing or chemical processing, automation limits human exposure to risky conditions. In industries involving hazardous materials, high temperatures, or heavy machinery, automation keeps human workers out of harm's way. Robots and automated systems can handle tasks in dangerous environments, significantly reducing the risk of injury or illness. So the sixth point is a better resource allocation. Better resource allocation helps employees can focus on more creative and strategic work rather than the mundane task. Freed from mundane tasks, employees can focus on innovative, strategic, or customer-facing activities. With automation handling the routine and repetitive tasks, skilled employees are freed up to focus on strategic planning, creative problem solving, innovation, and customer engagement. This boosts job satisfaction and allows organizations to get the most of our their workforce. And the last point is the scalability. So what we could understand about scalability is automated systems make it easier to scale operations as demand increases. As demand grows, automation allows system to handle increased workloads with a corresponding rise in labor or cost. Automation makes it easier to scale up operations without proportionally increased labor or cost, where you are processing more orders, managing a higher volume of customer interactions, or expanding to new markets. Automation adapts to growing demands with minimal disruption. So let's understand about the next slide. The brief history of AI in financial data. As AI has played a transformative role in financial data analysis over the decade, so I will give the point. Between 1950s to 1970s. In 1950 to 1970s, AI was in its inefficiency focusing on symbolic logic and probabilistic models like Bayesian statistics through primitive. This laid the groundwork. In 1980s, financial institutions began experimenting with AI for trading. Firms like Renaissance Technologies pioneered quantitative strategies driven by algorithms and statistical models. The finance industry began experimenting with AI, particularly in hedge funds and trading. Notably, Renaissance Technologies used algorithmic strategies built on statistical and AI technologies to gain an edge in the market. Expert systems and early from an form of AI that mimicked human decision making also gained traction for assessing loan applications and performing credit evaluations. Third point date in 2000. In 2001, with more computing power and data availability, machine learning became integral to financial forecasting. Predictive models were used for stock returns, credit scoring, and portfolio optimization. As computing power increased and digital financial data exploding, machine learning emerged as a powerful tool for analyzing patterns and predicting outcomes. Financial firms started using supervised learning for credit scoring, default prediction, and asset pricing, while unsupervised learning explored portfolio clustering and market segmentations. The first point eight in 2010. In 2010 presents, AI applications become more sophisticated and widespread. Tools like Natural language processing enabled sentiments analysis from news and social So the advantages are improved accuracy. Automation reduces human errors in data handling, leading to cleaner, more reliable records. Built-in validation rules also help ensure consistent and compliance. The second is time efficiency. In time efficiency, large amounts of data can be processed in seconds, accelerating routine financial tasks like invoice matching and reconciliation, saving both time and effort. To which automated systems can handle vast volumes of transactions or financial entries in seconds, tasks such as invoice processing, matching records, or reconciling bank statements, which might take hours manually, are completed in a fraction of the time. This accelerates overall workflows and supports faster financial closing. The third is cost saving. Automating repetitive tasks reduces the need for manual labor and lower the cost of correcting mistakes or delays, leading to better resource utilization. To which by reducing reliance or human labor for repetitive processes, companies save on staffing, training, and the cost of correcting errors. Automation also minimizes the likelihood of delayed payments, missed revenue, or regulatory penalties, offering both direct and indirect cost savings. The fourth point is real-time processing. Without continuous data updates, business gain access to up to the minute insights, making it easier to react quickly and make smarter decisions. To which automation enables continuous data capture and reporting, allowing leaders to monitor performance and make informed decisions based on live dashboards and real-time metrics. This agility is essential for forecasting, budgeting, and adapting to changing market or operational conditions. Let's go to the disadvantages. Uh, the first point is high initial implementation cost. Investing in automation tools and infrastructure can be expensive. Smaller firms may struggle with costs related to software license, hardware, and training. Adopting automation requires sustainable upfront investment in software license, hardware infrastructure, and training programs. For a small and mid-sized firms, these expenses can be significant barrier. Cost also include hiring consultants or developers to customize and implement solutions which may strain limited budget. And the second point is complex setup and maintenance. And deploying automation solutions requires technical expertise for proper integration with existing systems. Regular updates and maintenance are critical to keep performance and data accuracy in check. Implementing automation is rarely plug and play. It involves system integration, data migration, and process redesign, often requiring skilled IT professionals. Once deployed, automated systems demand ongoing updates, bug fixes, and recalibrations to remain accurate and functional, especially when business process or regulations change. The third point is data privacy and security concerns. Automated systems handling sensitive financial data must be protected with robust cybersecurity protocols. Without them, there is a high risk of breaches or data misissue. Automated tools often process sensitive financial or personal information without strong cybersecurity protocols like encryption, access controls, and compliance with data protection laws. There is an increased risk of breaches, misissue, or regulatory violation. Ensuring data security is ongoing responsibility, not a one-time task. And the fourth point is dependence on data quality. AI relies heavily on clean, structured, and accurate data. Poor quality input can lead to faulty analysis, wrong predictions, or flawed financial decisions. The effectiveness of automation, especially AI-driven tools, heavily depends on the quality and structure of input data. If the data is incomplete, outdated, or inconsistent, the outputs, forecast, reports, decisions may be flawed or misleading. This can impact financial accuracy and erode trust in automated systems. So let's go to the next topic, which is key stakeholders. The first point is financial institutions. Banks, investment firms, and insurance companies used AI to improve risk assessment, detect fraud in real time, automate trading strategies, and personalize financial service. AI helps them process massive amounts of data swiftly and make informed decisions with greater accuracy. This includes bank, hedge funds, investment firms, and insurance companies that are at the forefront of AI adoption. They are leveraging AI for real-time risk assessment like credit scoring based on alternative data sources, example, spending behavior or social signals, and for fraud detection is using machine learning models trained to spot across billions of transactions. In capital markets, AI-driven automated trading, also called algorithmic or high-frequency trading, use predictive analytics to make split-second buy or sell decisions, maximizing returns while minimizing human error. Insurance firms also use AI to streamline underwriting, claims processing, and customer personalization. The second point is technology provider. These are the companies behind the scenes developing AI models, machine learning algorithms, cloud infrastructure, and financial analytic platforms. They supply the technical foundation that powers AI adoption in finance from the automation tools to predictive modeling engines, to which these are the architects building the digital backbone of modern finance. They create AI models, cloud platforms, APIs, and analytics tools that power intelligent financial applications. Companies like Microsoft, Google Cloud, and AWS offer scalable infrastructure and pre-trained AI services that financial institutions can integrate into their tech stacks. Meanwhile, fintech companies develop specialized solutions ranging from inverse automation like Hypatos or Verify to AI-powered wealth management platforms. These providers are critical in enabling secure, compliant, and high-performance AI workflows for finance. The third point is investors and stakeholders. Individuals, venture capitalists, and institutional investors who fund AI innovation in finance play a crucial role. They support the growth of AI startups and establishing firms alike and expect returns through increased efficiency, market competitiveness, or scalable product offerings. These stakehold these stakeholders include venture capitalists, angel investors, private equity firms, and public stakeholders who provide financial backing for AI-driven ventures. They play a vital role in fueling innovation and market expansion, funding startups that build new AI solutions, or helping traditional financial firms transform digitally. In return, they expect growth in profitability, market share, or technological edge. Their confidence is AI's potential often influences market evaluations and strategic decisions within the financial technology sector. Together, these stakeholders Groups form a dynamic ecosystem where financial institutions demand intelligent tools, tech providers supply the innovation, and investors fund the transformation. So let's go to the next slide. The key AI technologies, OCR, optical character and recognition. The first point is NLP, which is natural language processing. NLP allows AI system to understand and interpret human language in finance. It is used to analyze finance reports, interpret news headlines, and respond to consumer inquiries, helping firms stay informed and provide better service. To which reading and interpreting financial statement, earning reports, and market news, and virtual assistants to handle customer service inquiries with natural human-like dialogues, which scans news articles, analyzed briefings, and social media to gauge market mood and predict asset behavior. The second point is robot process automation. RPA automates rule-based repetitive tasks like data entry, transaction logging, and regulatory compliance. It improves speed and accuracy, freeing up human teams for more strategic work. To which automate data entry, account recognition, and transaction posting, ensure compliance by running automated checks on transactions and documentation, reducing processing time for things like loan origination or KYC, know your customer onboarding. Third point is the machine learning. Machine learning algorithms learn from historical data to make predictions or decisions in finance. It is used to forecast market movement, assets, credit risk, and guide investment strategies. To which it will help to predict market trends by analyzing historical prices, economic indicators, and news sentiment. Access risk, such as evaluating creditworthiness or portfolio volatility. Make real-time decisions, including trade execution, fraud alerts, and investment recommendations. The fourth point is computer vision. Computer vision, this tech help machines see and interpret visualize data. Financial institutions use it to analyze signature on checks, validate documentation, and even monitor security footage for suspicious behavior. And the document verification readings, scanned contracts, forms, and checks to extract and validate data. Signature matching and fraud detection, flagging inconsistencies in physical signatures or scanned documents. Monitoring physical environments such as using CCTV, analytics in bank branches or ATMs to detect unusual behavior. Can so it's time to perceive the next slide, which is machine learning and deep learning. The first point is the automation.ai. This tool automates repetitive web-based data interactiveness used bots. It leverages machine learning to mimic human interactions with web forms, helping to reduce manual workload and improve efficiency in financial workflows. This tool focus on automatic web-based workflows without the need for writing code. For finance teams, it simplifies data scraping and form filling on website, such as pulling transaction data or submitting report. Its use of machine learning allows it to adapt to changing web layouts and user input behavior, making it a flexible digital assistant for repetitive data entry tasks. And the second point is that Vena Solutions. Vena offers AI-enhanced financial planning and analyze tools. It platform integrates machine learning to assist with budgeting, forecasting, and data consolidation, making financial data management smarter and more collaborative. which are comprehensive financial planning analytics from Vena integrates ML to forecasting business outcomes, refine budgeting strategies, and automate variance analysis. It enhances the collaborations by connecting it spreading spreadsheets to a central system while using AI to detect patterns and surface insights across financial data sets. The third point is NanoNet's flow. NanoNet supplies machine learning to scan, extract, and clean data from invoices, receipts, and other financial documents. It reduces manual data entry by learning how to identify and structure relevant financial fields over time. Learners applies deeply learning based on OCR to extract structured data from unstructured documents, especially receipts, invoice, and forms. Over time, it learns to understand varied document layouts and financial terminology. It also performs auto classification of expenses and detects outliers, making it powerful for financial data intake and hygiene. The fourth point is Stamply. This solution focuses on invoice and accounts payable automation. It uses AI to streamline invoice capture, automate approval workflows, and detect duplicate or fraudulent transaction, speeding up the financial close process. Stamply streamlines accounts payable process by embedding AI into invoice management. It automates invoice capture, matches invoices with purchases, order, and delivery notes, and leverages communication AI to resolve approval bottlenecks. The ML algorithm also analyzes invoicing history to predict issues and recommended routing actions. The fifth point is Bouquet AI. Bouquet AI targets accounting firms and bookkeepers by automating ledger entries, categorization, and reconciliations. It uses machine learning to continuously improve its understanding of transaction patterns and classifications. Specifically designed for accountants and bookkeepers, automates transaction categorization, ledger entries, and ML model trained on vast accounting data to improve classification accuracy and highlight anomalies such as duplicate entries or mismatch account reports, minimizing audit risk. The sixth point is high radius. The high radius applies AI to automate accounts receivable process. It uses predictive analytics to access customer payment behavior, match payments with invoice, and minimizing days sales outstanding DSO, improving cash flow. Uh, basically, the advanced ML models for automatically accounts receivable process, including radius evaluation, and collections management. The platform can predict all payment behavior, optimize collection strategies, and manage payments to open invoices with higher accuracy even across partial or consolidated payments. The seventh point is NetSuite, a leading ERP platforms that incorporates AI and machine learning for financial management. Its tools automated tasks like expenses categorization, anomaly detection, and report generation while seamless integration with another business system. Through which Oracle NetSuite includes AI functionally within its cloud ERP offering. Its ML features enhance financial reporting, expenses management, and anomaly detection for insurance. It can flag outlier transactions, and suggest budget adjustment, all while integrating deeply with broader business operations. And the eighth point is Trulia, which is uses AI for financial compliance and data accuracy and automation to financial compliance, particularly in lease accounting, revenue recognition, and audit readiness. It converts structured and unstructured documents into real-time auditable records, to which it focuses on financial compliance, particularly around accounting standards such as ESC and 842 and IFRS 16. It uses AI to interpret contract, extract list terms, and populate journal entries automatically. It sentence and also transforming complex, unstructured financial documents into audit-ready reports in real time. Right. Yeah, so we'll pursue the next slide, which is The machine learning and deep uses. So the first point is automated data entry. Machine learning models recognize patterns in financial documents, extracting relevant data, entry and cleaning, which, and the second is error detection and correction. AI identifies inconsistent, missing values and anomalies and ensuring cleaning and reliable financial records. NLP, natural language processing, helps process unstructured financial data such as invoicing and receipts, converting them into structured formats. Fraud detection, DL models analyze transaction pattern to activities enhancing security. And the fifth is scalability and reliability. AI tools for handling new data, improving efficiency and accuracy over time. Let's go in deep about this topic. So the first is automated data entry, ML, in which machine learning models are trained to detect patterns in structured and unstructured financial documents like invoicing, balance sheets, and receipts. They can accurately extract relevant fields, example dates, amounts, vendors, and populate databases without manual intervention. This speeds up data capture, improves consistency, and enables real-time financial tracking. So in error detection and correction, we can know that AI systems powered by ML scan vast data sets to detect inconsistencies such as duplicate translations, missing values, or out of range entries. These tools can not only highlight anomalies but also suggest correlations based on learned patterns, ensuring clean audit ready financial records that improve trust and compliances. In third, NLP. As we know that we combined with ML, NLP can process handwritten receipts free from commitments in emails, scanned documents, or vendor message. It converts unstructured text into structured data that integrates seamlessly into accounting system. This allows automation of tasks like invoice approval workflows, expensive categorization, and contract data extraction. So let's go to the fifth point, in which fraud detection. By the fraud detection name, we can know that it helps to secure our data. Deep learning models, particularly neural networks, analyze high volumes of transaction data to identify subtle and complex fraud patterns. Unlike traditional rule-based systems, DL models continuously learn from new data and adapt to evolving fraud strategies. They can assess context behavior, device fingerprints, and timing anomalies to flag suspicious transactions in real time. The fifth is scalability and adaptability. A major strength of ML and DS system is that they improve with experience as they more data flows through them. Their performance sharpens, resulting in faster processing, higher accuracy, and more sophisticated decision making over time. This adaptability supports growing financial records and changing business in needs without manual programming. Okay, so let's do the second of this, on which we would know about the robotic process automation, which can be called as RPA. In account, the first point is that accounting payable and receivable automation. RPA bots handle invoicing, processing, match them to purchase orders, and automate payment workflows, saving time and reducing human input. RPA bots streamline the entire invoice to payment cycle. They automatically capture invoice data, verify it against the purchase order and receipts, and initiate approvals without manual touchpoints in accounts receivable. They track incoming payments, send reminders, and update ledger entries, improving cash flow and reducing overdue balances. The second point is financial reporting and compliance. Automated bots generate reports and monitor financial data to ensure regulatory compliance while minimizing errors from manual reporting, in which it automates the generation of recurring financial report like balance sheets, profit and loss statements, and regulatory fillings. Bots pull data from various sources, perform calculations, and format report according to compliance standards such as IFRS or GAAP. This reduces human errors, ensures timely reporting, and strengthens audit readiness. If you go to the third point, we could know that the fraud detection and risk management. RPA integrates with AI to analyze transaction patterns, flag anomalies, and enhance fraud prevention. To which AI tools to scan transaction patterns, flag suspicious activity, and support real-time fraud detection. Integrated with AI, RPA bots continuously monitoring transactions and user behavior to flag deviations from unexpected patterns. For example, unusual payment amounts or login activity can trigger alerts. These systems create a layer of real-time monitoring that complements traditional audit controls and supports proactive risk mitigation. The fourth point it is payroll processing. RP automates salary calculations, tax deductions, and benefit management, ensuring timely and accurate payroll runs. RPA simplifies payroll by handling tasks like salary calculations, tax deductions, attendance tracking, and benefits disbursement. Bots fetch data from HR and accounting systems, compute net pay, and ensures payments are processed on schedule, freeing HR teams from repetitive time-sensitive tasks. And the fifth point, we got to know that the data entry and reconciliation. Bot extracts and cross-checks financial information across systems, improving data accuracy and speeding up reconciliation process. RPA bots extract financial data from disparate sources like emails, spreadsheets, or ERPs, validate its accuracy and reconcile it across systems, whether it's matching payments entries with bank records or syncing balances across ledgers. Bots work faster and with few errors than manual methods. Let's go to the next slide, which is data validation algorithms. Let's extract it. On the heading, we got to know that AI-powered tools are revolutionizing financial data entry and cleaning by automating tedious processes and ensuring accuracy. Data validation algorithms play a crucial role in this automation by verifying the integrity, consistency, and completeness of financial data before it is used for analyzing or reporting. Let's do the key tools. First is numerous AI. These tools offer automatic validation systems that rapidly identify and fix data inconsistencies. It across checks financial entries against rule and reference datasets, helping business minimize errors without manual oversight. Second is data grid AI. By using autonomous AI agents, data grid AI streamliness financial data entry flows. These agents reduce the likelihood of human error by intelligently recognizing patterns, filling in missing data where appropriate, and highlighting deviations from expected norms. Third, the automation AI. This platform used AI-powered bots to automate repetitive data handling tasks such as copying values across system, verifying fields, and running validation checks. It particularly useful for automation institutions processing large volumes of transactional data with minimum tolerance for error. Let's see how data validation algorithms work versus rule-based validation. Algorithm be date, month, year. Amounts must fall within defined limits. They immediately flag records that violate these parameters, which is critically for regulatory compliance and standardized reporting. That is machine learning based validation. ML models learn from historical financial data to identify subtle anomalies like a vendor payment that's higher than usual or a transaction posted at an unusual time. These algorithms adapt and improve with the use, becoming better at spotting risk over time. And the third is duplicate detection. Validation routine compare new entries with existing data to find duplicates based on invoice numbers, transaction IDs, timestamps, etc., and either flag or automatically remove them to avoid distortion in reporting or decision making. The last is error correction and standardization. This algorithm go beyond just detecting problem. They actively correct formatting issues like inconsistent currency symbols or decimal separators and convert the data into inconsistent formats across system, making integration and reporting for more reliable. Let's go to the next slide, which is data normalization and deduplication. In data normalization, we could note that which ensures that the data entries follow consistent formats like dates, currency, or capitalization across systems to avoid confusion and support reliable analysis. To which normalization ensures consistency across dates by unidentifying formats such as currency symbols, numeric separators, text casting, and field naming conventions. This is essential when consolidating data from multiple sources like legacy vendors, branches, or legacy systems into one clean dataset that supports accurate reporting and integrations. The second is the scaling and transformation. It adjusts numerical data to a common scalar transform variable example log transformation to improve comparativity and machine learning performance. This helps to involve adjusting numerical such as the consistent scale. For instance, converting revenue data from thousand to millions or the transforming skewed distributions using logarithmic scaling. Such transformation improve the performance of analytical models, particularly machine learning algorithms, by reducing bias and ensuring comparability across features. Categorization. Normalization also influ- involves mapping similar entries into predefined categories. For example, utilities, power bills, and electric charges might all be normalized under the single category utilities. This simplifies downstream analysis, spend tracking, trend identification, and budgeting, while enabling automated classification in financial dashboards. In deduplication, we got to know that there is a 3 points, which is fuzzy matching algorithms. Instead of relying on extract string matches, fuzzy matching uses algorithms like the Leveston distance or Jaro Winkler to identify records that one similar but not identical as ABC Corp and ABC Corporation. This helps avoid duplicate records that the rest due to minor validations, typos, or inconsistent input formats. The second is machine learning based deduplication. These algorithms go beyond rule-based logic by learning from labeled examples to detect potential duplicates. They consider multiple fields, example name, address, transaction values, and the context in which the data appears, increasing accuracy in identifying near duplicates even when exact matches are not obvious. So the third is the automated data cleaning. Once duplicates are identified, the systems automatically resolves them by emerging records, removing redundancies, or selecting the most complete or recent version. It can also standardize values during this process to align with the normalized data format, ensuring datasets remain cleaning, accurate, and ready for analytics. So let's go to the next slide, which is the AI pipelines for ETL. The first is automated data extraction, in which we ought to know that AI power tools use OCR APIs and web scraping to fulfill financial data from reverse sources like invoices, bank statements, and ERP systems without a manual input. Machine learning improves the accuracy of extracting structured and unstructured data over time. Second is intelligent data transformation. During this phase, AI applies logic to clean, normalize, and and categorize data. For example, it can auto tag expenses, standardize currency formats, filling in missing value based on context and map account codes, making the data ready for analysis for reporting. Third is anomaly detection and error correction. Machine learning algorithms scan for inconsistencies like duplicate entries, misclassified transactions, or outliers. They not only detect this issue but often suggest or even auto-correct them based on historical patterns or business rules. And the fourth is optimized data loading. Once clean, the AI pipeline loads the data into target systems such as data warehouse, financial model in Excel, or visualization tool in the most efficient way. AI can schedule loads based on usage patterns or prioritize critical data, ensuring faster access and reduced load failures. Let's go to the next slide. Error companies should avoid. The first is inconsistent data interpretation. When different teams interpret the same data differently. Example, classifying and expenses differently across departments, it leads to reporting conflicts, poor decision making, and misalignment across the organization. Second is inconsistent data formatting. Variations in formatting like data styles, number separators, or currency fields can break for automation pipelines, cause integration failures, and lead to incorrect calculations in analytics or reporting. Third is failure to track data changes. Without proper data in versioning or audit rates, it's difficult to identify when and why data was modified. This compromise accountability hinders errors resolution and violates compliance norms. And the fourth is invalid data. Entries with typos, incorrect figures, or mismatched fields, like text in numerical columns, can corrupt reports, trigger false alerts, or misinform downstream decision making. Fifth is incomplete data. Missing values such as blank fields for vendor names, tax IDs, or transaction amounts affect the completeness of records, disrupt automation logic, and introduce errors in analysis or audits. The next slide is comparison of AI services. The AWS, which offers SageMaker for ML model training, Bedrock for generative AI, and Lex for chatbots. Supports NVIDIA, GPUs, AWS, Inferentia, and Habana Gaudi for AI acceleration. Uses QuickSight for AI-driven BI, Redshift, ML for predictive analytics. Azure provide Azure machine learning, Azure Open AI service, and cognitive services for vision, speech, and language AI. Offers ND series VMs optimized for AI workloads. Features Synapse Analytics with AI-powered insights. Features Vertex AI for ML, AutoML for automated model training and TensorFlow integration. Provides TPUs sensor processing units for high performance AI computing. Offers BigQuery ML for AI-driven data analytics. So we go to the next slide. APIs for data entry automation, in which it covers the finance, accounting, healthcare, retail and e-commerce, real estate, legal, HR management, logistics. In AI, in AI data entry for different industries, in which these are the fields which can be managed automatically, to which it leads to the less of human work. In APIs for data entry and automation, branches leading to finance automates process of invoicing receipts, bank statements, reduce manual errors in financial reconciliation. Second is accounting, speeds up data entry into accounting software like QuickBooks or Xerox. Automatically, like classifies expenses and matches transactions. Third is healthcare. 'Extracts and inputs patient information from forms and medical records, reduces administrative burden or healthcare staff. Retail and e-commerce automates order processing, customer data entry, inventory updates, user for processing, product listing, and invoices. Legal land access from legal documents, contents, or case files has built structured data from unstructured text. Seventh is structure management. Automates resume parsing, onboarding forms, timesheet entries, reduces manual effort in employee data management. Eight is logistics. Automates data entry of shipment details, delivery logs, custom forms, improves tracking and reporting efficiency. Next slide we go for it, which is reinforcement learning applications, in which this is the process of getting only it can be say as the cycle of the process, to which it starts. It does not have any start, but it goes from environment, reward, agent, action, and state. So these are the text-based AI tools. The first is Chatbox, in which it's a Dialogflow by Google, Microsoft Bot Framework, RASA, IBM Watson Assistant. The second is language transactional tools, which are Google Translate, DEEPL, Microsoft Translator, Amazon Translate, and Microsoft Translator. Text generation models. Open AI GPT's generative pre-trained transformer. The second is huge face transformers. And the third is CTRL, which is called as the conditional transformer language model. And we go on which, and in this process, this slide, we got to know about image-based AI tools. The first is image generation. Style GAN, Big GAN, DALLE, Gemini A. Face recognition analysis, open face, FaceNet, DLIB, Azure Face API. And the third is image classification, in which TensorFlow, PyTorch, Keras Cafe. Let's go on chatbot and conversational AI tools. Powerful natural language processing to understand user internet. Seamless integration with messaging platforms like Slack, WhatsApp, Facebook Messenger. Highly customizable conversational flows and dialogue trees. Leverage machine learning for intelligent response generation, analytics, and insights on user interactions and conversational patterns. And if you go on this paragraph, it is about AI uses cases in financial industry and worldwide. So in this, we got to know about the fraud detection cases is 50%, financial processes analysis is 41%, cybersecurity is 33%, and the personalization of product services is about 33%, customer care is 31%, and the assessment management is very low, in which it is about 25%. The next slide is about popular tools overview. The first is effortless automation management with Orchestra, a complete versatile toolkit. Third is proven ability to scale. Fourth is powerful AI and cognitive features. Fifth is workflow aggregation and automation tool. So let's talk about the first point. It is about centralized web-based platform for managing, monitoring, and deploying automation bots at scale essential for enterprise automation governance. Second, in a complete versatile tool, offers drag and drop design in UiPath Studio, custom activity libraries, and integration with various systems, ERP, database, cloud, etc. In proven ability to scale, which is also called as scalability, it proves ability to deploy across teams, departments, or entire organizations while maintaining performance and control. And the fourth is powerful AI and cognitive features, which is about the document understanding extracts data from semi-structured or unstructured content like PDFs, invoices, and emails using AI and ML. And the fifth is workflow aggregation and automation tool. Combines tasks across disparate systems like SAP, Salesforce, and legacy apps. Enables end-to-end workflow orchestration, connecting humans and bots in seamless business session process. Offers action center for human in the loop workflows where decisions or approvals are required. Thank you, sir. The next I will continued on the second session.